Hi, I'm Alistair McCaig, one of the analysts here at IG. And with less than a week to go, I thought it was worth our while taking a fresh look at Twitter ahead of its launch on the New York Stock Exchange. Once again, the IG grey market is strongly pointing towards an IPO book value being considerably lower than investor sentiment would infer. Currently on our grey market, client-driven trading sentiment has seen the value creep up to that $22 billion level. Well off its highs, in fairness, of over $30 billion, but still considerably higher than Twitter themselves value it. Back in 2011, Twitter organised some funding, raising about $400 million. At that point in time, the company valuation was around about $8 billion. The IPO paperwork that we've seen released by Twitter sees them value themselves at around about $11 billion. Quite a discrepancy between the two. It very much looks like Twitter are trying to underplay their hand quite strongly here, especially when you bear in mind the fiasco that we saw on the back of Facebook when it started trading after its IPO launch. I think it's also worth noting, taking a glance at the shareholdings of some of the founding members of Twitter as well. They really are hanging on to the vast majority of their stake there, certainly indicating that they believe there's further value to be seen out of this, and they're not looking to run for the exit straight away. As we see the share price, or the anticipated share price of between $17 and $20, one of the things I think we should consider is why Twitter are raising these funds. Well, at this point in time, it doesn't make any money, so it's effectively burning through cash, and those $400 million that they raised back in 2011 are probably already spent. I guess what they're looking to do is cover some of their costs, and I think it's worth noting that the full-time staff numbers that they have are around about 2,300 at the moment, and only last year they were ticking around about 1,200. I think it's also worth our while considering some of the implications, some of the figures of Twitter when we look at the potential valuation going down the road. At the moment, they have about 230 million registered users of Twitter, and they've seen an annual increase of around about 39%. It's also worth noting that Twitter is a social media outlet, and it does benefit considerably from some of the larger names that have their Twitter account there, drawing people to look at Twitter directly. It does cover quite a range of spectrums. We see that David Cameron has a Twitter account, Usain Bolt from the sporting world has a Twitter account, and Lady Gaga as well from the pop culture, all having Twitter accounts. Does ensure that many people want to follow them and get on board and have their own Twitter account to look at this. I guess Twitter find themselves in that difficult growing stage where they've got to convert the amount of users they have into some sort of fiscal return, the monetization of those users. And at the same time, they want to ensure that they don't alienate them. Obviously, they'll probably be paying close attention to how Facebook got on with their latest set of figures, having had to go through the same painful growth stages, but maybe a little bit further down the road. I think when investors look at Twitter as well, we've got to realise this is a considerably different beast from the likes of the Royal Mail's IPO. Royal Mail is a considerably more cultured company, having been running profits for some time, and the likes of Twitter paying any dividends in the near term is considerably reduced. Having said that, though, the blue sky potential is considerably greater, and you wouldn't necessarily be looking for Twitter to grow in percentage terms, but possibly even multiples. Obviously, that's an ambitious target, but one they'll no doubt be looking at. And I guess part of the reason why we think Twitter might well be able to come in with these sort of multiple returns ultimately once they've managed to get their infrastructure in place would be the shifting demographics of retail users around the world. And here at IG, we know firsthand the changing demographics. We now see well over 30% of trades placed on the IG platform done so through mobile devices. And we know that 60% of active users of Twitter do so through a mobile device. And I guess when they're looking to try and monetize those users, the ability to potentially advertise directly at people in specific regions would be of a greater value as far as potential consumers might be concerned. For all of this and further analysis, please go to IG's website, www.ig.com. Many thanks.